traders, you are watching the weekly Forex report by Light Forex. From this video, you will learn about the most exciting opportunities for the main currency pairs. Let's have a look at the chart of the US dollar index. The weekly time frame shows us that the greenback declined last week, but met support of the line which used to be a long-term resistance line and now is limiting the downside for the American currency. The USD remains attractive relative to higher risk currencies like commodity currencies, Australian dollar, New Zealand dollar, Chinese yuan, Mexican peso, and so on. However, is under pressure versus the Japanese yen. As we can see from the chart of the USD versus Chinese yuan, Chinese currency is set for the biggest drop in 10 months. And here we need to mention news which are related to trade talks between the United States and China. During the weekend, US President Donald Trump threatened to increase tariffs on $200 billion worth of Chinese goods. And that, of course, was a negative surprise for the market. And this may lead to escalation in trade tensions. And this happens during the times when market players were rather positive and optimistic about trade talks. So you can see that there was a gap, and we can see similar gaps in charts of many other currency pairs which are sensitive to market's risk sentiment. Traders will try to estimate Trump's words during the upcoming sessions. Probably the situation will get better and the currencies will try to close the gaps if we see more positive comments. But for now, the situation remains uncertain, and yes, of course, this was not what everyone was expecting and what everyone was hoping for. So we start Monday with increased demand for safe haven assets and safe haven currencies. Let's see which events await us as well, and for that we need to check the economic calendar at lightforex.com. There you will find all important events which will make an impact on the market. On Monday, there will be a speech of the Bank of Canada governor, and also during the entire week we will hear from the members of American Central Bank, the Federal Reserve, and the comments will have an impact on the USD. All in all, we have to mention that last week, American Central Bank left monetary policy unchanged and signaled that it will likely keep rates steady. So now the market is focused on inflation in the United States to make further forecasts about interest rates. Members of the Fed give different comments, so it is hard to see a united position there. And on Friday, America released non-farm payrolls data. The markets decided to focus on the weaker aspects of the report. So despite the fact that there was a strong increase in NFP and the fact that the unemployment rate in America fell to the minimum level in more than 49 years, wage growth was only 0.2% on the monthly basis. That is modest, and that kind of hurt the greenback. This week, there will be more data from the United States as well. We will mention it now. And as for other things, other economies focus on the meeting of the Reserve Bank of Australia on Tuesday. There is the significant risk that Australian Central Bank cut interest rate, and in this case we'll see a deep plunge in the Australian dollar versus the USD. Australia will also release retail sales figures and trade balance on Tuesday, and we can see that the forecast for retail sales is rather weak, so of course a positive surprise may happen, but still traders will be rather negative about Australian currency. In addition, on Tuesday there will be inflation expectations data from New Zealand once a quarter, so the indicator is important, and the European Union will release its economic forecasts. On Wednesday, there will be the meeting and press conference of the Reserve Bank of New Zealand, and here once again there is some slight possibility of a rate cut that would be negative for New Zealand currency. China will release trade balance figures, and the European Central Bank will publish the accounts of its last monetary policy meeting. On Thursday, Canada will release trade balance, and the Fed Chair Jerome Powell will speak. US will release producer price index, and this is a measure of inflation, and taking into account the fact that traders now expect lower prices in the United States, and we can see that PPI indicator will be very important for the US dollar. The lower it is, the worse for the American currency. The higher it is, the better for the American currency. Here is the PPI. And on Friday, May 10th, we'll see the bunch of statistics from the United Kingdom. Britain will release quarterly and monthly GDP growth figures, and of course that will be closely watched by the market players to estimate the impact of Brexit uncertainty on the nation's economy, and figures will be important for the Bank of England's further monetary policy and for the British pound as well. Canada will publish labor market figures, employment change and unemployment rate, while the United States will release consumer inflation, and this is another inflation indicator, so the same as with PPI, it will have a high impact on the value of the US dollar. It's now time to switch to the charts and see technical analysis for major pairs. As usually, we start with the weekly chart of the euro dollar, and we can see that despite the fact that the euro tried to correct to the upside last week, it didn't manage to close at the weekly highs, and it didn't manage to close significantly enough the key level of 1.12. So the market players are not really eager to have euros. At the same time, of course, we can see that here on the weekly chart there is a kind of divergence between the oscillator and the price, and the low of the price is not confirmed by the low of the oscillator. It means that despite the fact that we are trading below 1.12, we do not expect the euro to plunge fast and to get going towards the level of 108. All the levels around 1.11 will provide support for the euro here. So even if the currency declines, it won't be fast. Let's have a look at the daily chart. We can see that here after the minimum in the area of 1.1113, there was a spike to the upside, spike to the downside. The higher level was tested on the downside. So the currency pair is trying to find some base around this support line, and it may try to retest higher levels, advance above 1.1215, will open the way up towards 1.1275, and on the upside to the area of 1.1320. This will likely limit any kind of the upside in the euro, because we know that the currency has weak fundamentals, so only weak data from the United States will be able to bring the euro up, but in the area of 1.15, sellers will likely re-emerge and will once again face levels around 1.12 as the targets. The British pound made a surprising increase during the recent days. It managed to stay above 1.2880 levels, to return above the daily moving averages here, the level of 1.30, and we can see that there were a couple of thrusts to the upside. The pair is now enjoying support of the 50-day moving average in the area of 1.31. The level to watch on the downside is this level, and the next support is 1.30. On the upside, we will see significant resistance in the area of 1.3220, as here we find the high of January. So only above this level, the pair will get a chance to continue the way up to 1.33. Technically, the pound has a chance to move higher, although 1.3220 is a serious resistance. Here we find the 100-week moving average as well. Still, fundamentally, of course, the pound is still weak. Still, the uncertainty related to Brexit is a major risk, so it is really a very risky bet to be long on the pound, and more sense to look for sell opportunities in the area of 1.3220, targeting the level of 1.30. The USD Japanese yen opened with a gap to the downside. The currency pair is now trying to recover and will attempt to close this gap. As there are no news from the United States scheduled on Monday, the market's attention will be focused on the performance of US stocks. If American stock market is on the downside, then the currency pair may test the support around 110, and the next level, in this case 109.50. Weak data from the United States will increase the risk of the exchange rate turning to 108.55. If US stocks feel fine and the market relaxes and gets faith about the success of trade talks between the United States and China, then the price will need to return above 111.50 for us to become bullish and target levels around 112.15. This resistance will be rather hard, and only strong inflation figures from the United States will allow the currency pair to overcome this level and get to 115.15 mark. US dollar, Canadian dollar had some choppy price action last week as it was revolving around the level of 1.3450. All in all, the uptrend here remains, but it seems like the momentum is low and the price action may continue in the same fashion for some time. Australian dollar opened with a gap to the downside and now reached the level of 0.70, which used to be a strong support and now is acting as resistance. It will be hard for the Australian currency to rise higher in the upcoming sessions as traders await the results of the Reserve Bank of Australia's meeting. And if there is a rate cut, then we will see a deeper decline and the test of levels around 0.69, 0.66, 68.80, ahead of the support at 0.6830, where we find the minimum of 2016. New Zealand dollar stayed between 0.67 and 0.6580. But of course, we see that the upside is limited by the resistance line here, and only above the level of 0.6630 we will be able to target 0.67. The risks from the Reserve Bank of New Zealand are high and they are to the downside. The decline below 0.6585 will bring us to levels around 0.6540, the next important support. Gold is trading around 1275.50 level. we see some consolidation. At the same time, the upside is clearly limited by the moving averages in the area of 1294. So at these levels, we'll see that selling will intensify. The most important resistance is located at the level of 1300. So it will be difficult for gold to overcome this level. However, if the market's risk sentiment becomes worse and we break higher, then we will target naturally the level of 1320 and see the resumption of the previous uptrend and having the focus at 1350. If we see that the price turn back lower, the targets will be 1275, 50 and 1254, the 50% Fibonacci level. And Brent oil declined during the recent days. We saw a significant correction here. However, we can see that there is support in the area of 200-day moving average at 69.20. And if we manage to recoil above this level, we will then watch for the short-term resistance line, and return above 71.60 will help the prices to restore the uptrend movement. The further confirmation will be available if the price gets above 72.50. In this case, the target will be at 75 mark on the upside. Apart from the levels of 69, further support is at 68.30 and in the area of 67.50. This is all for today. Thank you for your attention and trade with Forex.